Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical support and demand area. In fact, from here, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, tested and rejected. And just a few months ago, the market tested this exact same area once again, started rejecting it to the upside. So in a situation like this, what we could expect is to see a bit more bullish continuation away from the zone, as already happened in the past when the market tested this same area. So from a monthly standpoint, at least for a bit more, we could expect bullish price action. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the situation is quite clear. If we look at the trend of this market, it is clear how the market has been creating here weekly higher highs and higher lows. We can see impulse, correction, higher high, higher low, another higher high, higher low, higher high. And now it would be the case of the creation of a new higher low and then higher high. So clearly we are in an uptrend with the creation of higher highs and higher lows, at least so far. Therefore, also here on the weekly time frame, there is a possibility of seeing more bullish price action and the market moving away from this area. We can also notice that if we look at the pattern, there's a very clear impulse and correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements that if we extend them to the left, we can see how they are actually aligned perfectly with a quite important support zone as well from a horizontal perspective. This exact same zone, in fact, was already acting as resistance here, preceding all these rejections to the downside. Then the market broke it to the upside and was turned support and respected as support in both these occasions. Then it broke to the downside, again, started acting as resistance. Again here, acted as resistance. Now the market has broken it to the upside again. Therefore, is supposed to now once again be turned from resistance to support. And as the market is testing this support and as it is aligned perfectly with those Fibonacci levels, this means that actually we have confluence of support inside of this area. And instead of a confluence of support zone, you would expect to see institutional longing. Therefore, that would increase even more the probabilities of a potential rejection to the upside away from the area. And we will be speaking about institutional longing later on in just a few minutes when we move to the commitment of traders. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear as well. We have a strong impulse followed by a correction. Now we're getting some sideways price action. Now, this could easily be an accumulation phase before a potential push to the upside. That is definitely a possibility. In fact, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the CAD, the first thing that we have to keep in mind is that if we're looking at the data for the CAD, actually we're looking at CAD USD because all currencies on the spot are traded against the USD. But since we want information on USD CAD, we simply have to reverse everything. And if we read here that net positions have declined from minus 800 to minus 76K, it means that institutions essentially are longing USD CAD by shorting the CAD. In fact, if we look here, institutions have increased their shorts on the CAD, therefore their longs on USDCAD, from 37K all the way up to 112K, and decreased their longs from 44K to 35K. So clearly institutions have been longing USDCAD, and this increases the probabilities of a potential push higher away from that zone. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also in the description, so you never miss new updates. Now, back to the analysis. As I was saying, in a situation like this, if institutions will continue to long USDCAD, there is a good probability to see a potential rejection to the upside away from the area, completing that weekly impulse correction and impulse pattern to the upside. Therefore, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't at all be surprised if we get a potential push higher away from this area, completing that weekly impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.